I'm Karl Domm, and I'm here with my daughter Avery.
Good morning, everybody.
And welcome to the Real P&L Trading Show, where every week I show you my real accounts, each tied to a specific trading system, so you can see exactly how every strategy performs in real time. I answer all your questions live, and I trade my safe wheel system right here in front of you, so you can actually learn it by watching me trade it. Now, when you hear me talk about the safe wheel, the AMP 122, the PL5, the earnings edge, here's exactly how they all fit together. So the safe wheel, this is for anyone who wants to understand the AMP style strategy that is, in its most simplest form, and it shows you the core principles: be systematic, be hedged, and protect your capital. The AMP 122 book here, this teaches you the actual framework behind all my systems. Always hedged, always non-directional, always rules-based. And this is the blueprint everything is built on, the all market profits framework. And then I have my PL5 or the PL5 Pro. This is the professional, fully developed version of that framework. It's the advanced rules-based system for traders with meaningful capital who want to consistent risk-adjusted returns and lower drawdowns. And finally, I have my earnings edge, and it still follows the AMP framework, just applied in a faster, earnings focused way that uses discounted options for controlled leverage. All right, so I want to make sure my tech is working okay. You guys let me know, hopefully, with the comments. And, good. Now, also be sure to post any questions you might have earlier rather than later, because sometimes I get to the end of the broadcast and we're in a little bit of a delay, and I might end the broadcast before being able to get to your questions. All right, let's start with the earnings edge. I always want to go over how my systems did over the last week. So with the earnings edge, you can see I'm up $3,478 this year so far. My net liquidation is $28,630. So I'm going to put that into a spreadsheet to make it easier to look at. $28,630. So I'm down a little bit from last week. Now, as far as the earnings edge, last week I traded NVIDIA and I broke even. So I have, since my 3.0 update, I've got 25 wins, 5 losses, and 2 break-evens. I have a win rate of over 80% when you compare the wins versus the losses. My average win is $1,092. My average loss is $611. In 2022, I did 63%. The market was down 20. In 2023, I did 17%. The market was up 24. And in 2024, I did minus 36% and the market was up 23. And I realized I needed to make a change. So I upgraded to the 3.0 system. And in 2025, I was up 321%. The market was up about 16.5. And so far, what's going on year to date, the SPY is at 678.75. It was down pretty good from last week. And so actually the market's down 0.5% this year to date, and the earnings edge is up 12.25%. Okay, so that is the earnings edge. Let's talk about the PL5 Pro 3.0. Move this screen out of the way, and I'm going to go to the account and share the net lick. I think it's this one here. Oh, okay, so let's get into the net lick. Okay, 482,754, 482,754. So I'm up about $10,000 from last week, 42,754. Now with the PL5 Pro, I started this on June 1st, 2025, so it's relatively young. I started with about $405,000. By the end of 2025, I was up to 470, made $64,000, up 16%. The market was up 16%, so pretty much just matched the market. So you can see when the market goes up, this goes up too. And then in 2026, I'm up 2.6%. I'm up about $12,000, and the market's down 0.5%, so outperforming there. And so far, the PL5 Pro, the 3.0, is up 19%, where the market's up 15.48. But on a risk-adjusted basis, is doing much better because my drawdowns are about half. So you can see I'm outperforming the S&P year to date, and you can see that's doing quite well. I'm not surprised at all. That's what I expected to do. All right, let's talk about the PL5, the Premier Level 5, the variant that I'm running. the S&P variant. And I'll show you my net liquidation here. I can't share the whole screen or it will show my account number. So 37,332 is the net lick. So it's up just a little bit from last week, 37,332. Now I started this on July 16, 2024, so the middle of 2024, and I started with $30,000 and I did 10.2% where the market was up around 4% from that point. And then 2025, I did around 12%, market was up 16.5. And so far year to date, I'm up almost 1%. The market's down about 0.5%. So overall, since the inception of this program, I'm at 24.4%. The market was up 21. So I'm outperforming the market slightly. And on a risk adjusted basis, there's really no adjustments to make. I will draw down with the market because this is the S&P 500 variant. Okay, safe wheel. How's the safe wheel doing? I think I'm down a little bit. Let's take a look. It should be this account here. Yeah, I'm trading SoFi, and 62 or 6,200, let's call it, is the net lick. So I'm down $76, 6,200. And you can see how the safe wheel's done since 2022. In 2022, it was up about 22%. Market was down about 19. 2023, it did 5%. The market was up 24, so underperformed there. 2024, I did 14%. The market was up 23. I was down 14%. So in 2024, I underperformed. And then 2025, I was up 5.5%. Market was up 16.5. Now, so far in 2026, I'm up 7.2% with the market down 0.5%. So I'm outperforming significantly in 2026. And you can see overall, I've done 24% where the market's up about 43. But on a risk adjusted basis, because I only have about half the drawdowns as the S&P, based on risk adjustment, I'm up around 48%, market's up 43. So pretty even when you talk about how much risk I'm taking. So that is the safe wheel results. So you see all of my results every week and my net liquidation every week. Of course, I don't add or subtract any money from the account, right? So next I'm going to trade the actual safe wheel. So let's take a look at where I am in my positions. Okay, so one of the things I see right away is that I'm long 200 shares, which means that the SoFi is the stock that I'm trading is actually going down enough to where I would get assigned twice. And I've got my put hedge. So question here, are these hedges doing what they're supposed to do? And I have 3 questions with the put hedge. This particular hedges call is just something I put on every Friday for $5. That's not, you really don't have any questions about that and how to manage it. You just put one on for $5 every week, whatever.
Hey, Dad, remind me, did you own 200 shares last week?
I did own 200 shares last week, and I was able to sell a covered call against 100 of those shares because I was assigned at $24.50 strike, which I couldn't sell any premium. Then it was assigned at the $22 strike, which I was able to sell premium. So that's what I did last week, is I sold premium against 100 shares. Okay, so first thing I'm going to do is I'm going to make sure that my put hedge is doing its job or doing what it's supposed to do or doesn't need any adjustments. So first question is, do I own 200 shares? Yes. And if that is yes, has it paid off? So it's up 678. This is up down 800. So it has not paid off. In other words, it's not, if this 678 was higher than this 800, then it would have paid off and I would go ahead and execute and sell everything off, but it is not. I'm down like $120 on it. $120 on it. Okay. So the answer to that's no. The other question is it within 100 days? Is it under 100 days? Because if it is, it will depreciate too fast. The answer is no. And the other question is this strike, this $22 strike, close enough within 70% of the actual price of SoFi? Well, it's actually in the money. So usually this is out of the money, and I see how far out of the money it is. But because it's in the money, obviously I don't need to make that calculation. So the put hedge, there's nothing to do there. Now that my hedges are in place, I'm going to go ahead and attempt to sell a covered call again at my cost basis at the 24.50 strike and at the $22 strike. Now today's Tuesday instead of Monday, so there's going to be a little less premium. We'll see if that has any effect on anything. So I'm going to go to the trade tab. I'm going to look to write a covered call, and I'm going to use this 3 days. These expire on Friday. Let's see if I can get enough premium. So at the 24.50, I cannot get at least $20. So I can't sell the 24.50. How about the 22? Cannot get any enough premium. I can't get $20 worth of premium. So what should I do?
The very much anticipated trade.
So I'm going to do the blaze of glory, okay? Because I'm not just going to sit here stuck in this position. I'm just going to go ahead and sell out where I can get the most extrinsic value. And I'm just going to possibly or even probably take a loss on my shares, but that's okay because I've been collecting premium this whole time and I'm still up on SoFi overall. Now, where's the most extrinsic premium? Well, it looks like the 19th, because if you go to the out of the monies, you can see these are worth about 37 cents. These are worth about 46 cents out of the money. This is more extrinsic value. I'm going to sell the 19 covered call, and I'm going to do 2 of them instead of 1. Normally I do 1, but I'm going to do 2 because I have 200 shares. So I'm going to collect, maybe $120 here, something like that. Okay, so that makes up for the difference between my put hedge and my...
I have a question. So when you are defining extrinsic value, you're looking at the put side and comparing it to the call side at the money. Is that how you're doing that?
I'm looking at the out of the money. It's got to be out of the money, because if it's out of the money, everything I'm looking at is extrinsic value. And then over here, I'm looking at out of the money, and everything I'm looking at is extrinsic value. So
okay,
this
so you're
is
just
higher.
looking at the price, basically.
Say again?
You're just looking at the price?
Yeah.
Okay.
Looking at the price. Okay, I'm going to look to execute here. Okay, so that filled. So I collected, $130. Okay, well, that's good, because that's the difference between my put and my 200 shares. So I just collected that premium right there, making this hedge, almost, a break even. And then you can see all of the every other time that I've sold premium in this cycle, which I don't know how long this cycle's been. I think it's been since the 12th of January. All that premium I've collected in this cycle is pretty much going to be my profit. So I'm always ABC, always be collecting. Okay, so let's take a look at any questions or comments. Avery, any comments from you so far?
Nope, and I'll always chime in if I have something to say. You know me.
You're going to go ahead and chime in. Okay, cool. All right, Will says audio is good. Thanks, Will. Shovel said he was first, but he was second. But that's close. Way closer than normal for him. Will, good morning. How you doing? Shovel says, hit the like button. Yes, I'd appreciate if you hit the like button. If you appreciate that I show my net liquidation of my account every week, and I also show you exactly what each system is doing, because it's individualized into each system. So it's a very good way to report performance. It's a very solid way. If you appreciate that, please hit the like button. I'd appreciate if you did that. All right, GS or G Shepherd says I can hear you. I appreciate that. Let me know that. Will says, did SoFi drop enough for the blaze of glory? Not a question, just excitement. Yep, blaze of glory. We're going down with a blaze of glory. In other words, we're going to take a loss on these shares. There's a high probability that we're going to take a loss on these shares. I mean, if SoFi drops below $19 by Friday, let's say it's at $18.80, then I won't take a loss. I'll just keep that premium. Shovel says SoFi is stuck in the fintech sell-off. It's actually performed very well compared to others. Oh, that's interesting. See, I didn't really even know that.
Yeah,
I
it's
don't,
down about 2% today.
yeah, but I don't pay attention to really the news or the fintech sell-off or whatever that is, to be honest with you. I mean, I didn't even look at this account. I didn't even look at SoFi from last week to this week. Like I just looked at it today. Will says last week someone talked about or asked about the Iron Condor Nest strategy. Did you or Avery get a chance to look at it? No, I haven't. I haven't looked at it. Any final thoughts? No,
Yeah,
I'm not sure. I
no.
don't know what it is.
Sounds interesting though.
Yeah. Some guy says, "Hi, Carl. I'm not sure I agree with the way you rebased the PL5 Pro results." Yeah, I mean, I'm sure some people are not going to like that. You didn't do the same for the EE when we changed. Yeah, true. Well, actually, when I talk about the earnings edge, yeah, true. I could have rebased the earnings edge when I hit the 3.0. And maybe I should have done it that way. Yeah, I don't
The cleaner
disagree with
cut,
you.
it started right in the new year. So.
January 2025. Yeah, because it was an easy January 2025 makes it easier to talk about when it actually really started. It's like a very clean break. So that's probably the reason why I kept the past results. But yeah, the PL5 Pro, the past results aren't really a good indication of how they're going to do how it's going to do in the future. So that's why I just broke it clean. All right, less is more. If you are in the blaze of glory, do you consider adjusting the hedge or just leave it be since you're getting out of the trade? So I'm not sure what type of an adjustment I would make to the hedge. It's already kind of doing its job. So I'm not sure what you mean by making an adjustment, but no, I'm not considering adjusting the hedge at all. Okay. Will says, I know I'm always complicating it, but what do you think of the blaze of glory with just one tranche? Just so I keep the upward projection with 100 stocks. I really want the 3 puts. That's actually not a bad idea at all, because there's advantages to that, because if you end up keeping the put hedge and you're only going up against 100 shares, you're actually going to really outpace the 100 shares if SoFi continues to go down. And you're also going to get the benefit of SoFi if it goes up. So that's not a bad idea. It might be something worth backtesting. But the other problem with that is it really takes away from the simplicity. I'm not saying that the safe whale is simple or by any means, but I don't want to make it more complicated. So that's probably the major drawback if I think about it.
Yeah, I would think the blaze of glory is kind of an exit. You just want to get out at this point.
And he called it the neutered blaze of glory, right? Scott says you can post an extrinsic value column in your options chain. Oh yeah, that wouldn't be a bad idea too. In the options chain, to put in the extrinsic value, and it'll tell you exactly what it is. Will, maybe Avery can get a catchphrase for the younger generation. I'm not sure what that would be.
If the P&L's cap, that's sus and a trap. I like that.
Or maybe catchphrase telling us to like. Oh yeah, there you go. That would be a good idea.
Hit that like button, everybody, if you're just enjoying my presence.
Since you have so much input sometimes.
It just depends on the day, you know.
By the way, Avery's very first input was, you remember what it was, Avery?
It is what it is. Yeah, we were kind of laughing about that after the fact. It was like, it kind of threw me off a little bit there, but that was good.
Okay, Alex says, what happens when price goes above your calls? Back to the cost basis. Okay. That $200 or $300 cost is accounted for. How? So, yeah, so let's say that you're saying that, let's say I get called away. Okay. And let's say that the gap here is $100 between what the shares are down and what my put hedge is covering. Well, I just covered that $100 right now by selling this Blaze of Glory trade. So yeah, it's, I'm going to take a loss on the shares, but my premium collected is going to make up for that when you combine it with my put hedge. I hope that answered your question there. Less is more. NVIDIA continues to slide. The trade is likely profitable now that you mentioned it earlier. Yeah, I broke even on NVIDIA. Most of the students in the course made money on NVIDIA, by the way. So I thought that was interesting, the fact that I broke even and most of the students made money on it. So thought it was worth mentioning.
Yeah, I slept in last Friday, so if it were me calling the exit shots, I probably would have made money too.
Probably. You tend to have more patience than me with the earnings edge, which is really different, because you would think that you would have less. No, I don't know. You have more risk. You're more risk tolerant.
And I'm also a woman, so we tend to be, well, actually, women apparently tend to be more risk, is the word adverse?
Risk averse.
Yeah.
Yeah, I'm more risk averse than you, and
Yeah,
I think it comes down to my comes down to my age.
Yeah.
Neil says, good Blaze of Glory explanation for today's trade. Great. Thanks, Neil. I appreciate that I was able to tell you that in a way that it was clear. ICB says, expanding previous question. Can you please get into more details of NVIDIA? Well, that's mainly for the people that are in the course, because they actually pay a subscription to get those details. So I probably will leave it for that.
Well, we could talk about how it performed, I guess. Kind of just ended up not really moving much while we were in there, so we ended up just coming out at break even a little bit. It kind of drew down a little bit the first day, not by a whole lot, but didn't really move too much that last week. So if you were still in it, held on today, then could have came out with a little bit more profit than if you exited earlier on Friday.
Right. Basically, the more the stock moves in a direction, the better that the trade P&L does. And it looks like that I got out when it moved in a downward direction, and then I guess it continued downward. So I could have made more money. I could have made money with it.
And then there's also just more general volatility today. What is it up? Oh, almost.
What's the market down $6? SPY is down $6. Okay.
So sometimes there's more general market volatility that could also help the earnings edge trade too. So
for sure, it would be great to be holding an earnings edge trade and the market crashes like it did on August 5th of 2024. Man, would that be probably make 50% return on my total capital in my whole account if that happened. I'm not sure what you're talking about. If you don't like it, take a hike. No, just stick around for the views. I'm not sure what you mean by that.
Oh, I think he's talking about my catchphrase. If you don't like, go and take a hike.
Oh, okay. There you go. Will seems to have some skills when it comes to that kind of stuff. Alex, okay, thanks. You're welcome. Will says, I went ahead and did the full Blaze of Glory, but bought 2 long calls for the protection, and those 3 puts are too juicy right now. Yeah, Will, you kind of do little variants and stuff, and it probably works out well for you with the safe wheel.
I mean, the put hedge is looking pretty juicy. I know it's not enough to, take profits on it, but it is up pretty nicely, I must say.
And Scott says that risk averse equals you've been burned before. Exactly. Avery, you've been burned before, but not enough. So that's probably why I'm more risk averse than you.
Yeah, I mean, I've had some moments, yeah. But I'm so young, so I'm like,
Yeah.
I'm like, it's not the end
Yeah.
of my world, you know, if I lose all my money.
Cam, how can I start the wheel strategy now? So I would make sure that there's a link in the description and you can get the total course. And there's 6 filters that you go through for picking the stock. And typically they're going to be a stock between $20 and $40. And then from there, there's other criteria. And then you can find a stock for that. That's why I have this list, but this list changes all the time. I try to get something closest to $30. This Billy might be a decent one, but I don't know. I haven't ran through. I'd have to run through the filters to make sure that it would
Yeah.
fit.
We're probably going to need to update this list here pretty soon.
Yeah. And if anyone has any good stocks, potential stocks for the safe wheel, please let me know and I'll add them to this list, because these all used to be good stocks, but now Intel, that's not a good stock because it's at 45. It's not too bad though. AA used to be a decent stock. Now I'm just going to take it off because it's at $55, so I can't use it. HPQ is at 18. It's close.
Do you think it's possible next week we'll be resetting the board here and doing a new stock, or what do you think?
Depends on whether SoFi stays above 19 or not. If it goes above 19, I will pick a new stock, because I can't use SoFi again because, well, maybe it'll be at $20. I might be able to reuse it. But I try to pick stocks that are closer to $30. That way they don't get to over 40 or under 20 right away, because then when they do that, then they kind of get out of reach where I want them to be. So I like them to stay within the range so I can stay in the cycle longer.
I think you want it to be between $22 and $38, right?
22 and 38 when I initially get in, yeah.
Mm-hmm.
Will says, thanks, Carl and Avery. See you next week. All right, well, we'll see you. I appreciate you.
Thanks, Will.
He says the real hedge is having Carl for a dad.
That's true.
True. Great knowledge. Thanks. I appreciate it. Let's see here. Neil. Oh, he's referring that if you want to start, maybe wait until next week's call. Carl may start over. That's possibly, yes. I'd say it's probable that I'm going to start over next week, but we don't know what SoFi is going to do. And Leslie Moore says your old friend Macy's might come back. Man, Macy's was a great stock that made money. Is it in here?
That was a good run, and along with, what was it, the DraftKings? That one was good too.
Let's see what Macy's is trading. Oh yeah, I liked Macy's a lot. It really worked out well, but it really doesn't matter which stock you pick, as long as it meets the criteria. Cam says, thank you all. It is what it is. Maybe that's your catchphrase.
I mean, it's true. It is what it is. Yeah.
Will says, ever think of selling calls in the money for the Glaze of Glory? Just for more guaranteed. Well, yes, but I did actually, I did sell in the money just now, but I want to get the most extrinsic premium as possible. So I ended up going in the money this time. But I won't go deeper in the money because the extrinsic won't be there.
Kind of more like at the money, right?
Pretty much it was at the money, but it was still in the money by 20 cents.
Because if it was in the money, wouldn't that mean it doesn't have any extrinsic value, or am I misinterpreting that?
Well, so when it's in the money, you have the intrinsic value and the extrinsic.
Oh, okay.
So I picked up 20 cents of intrinsic value because it was trading at $19.20 and I sold at 19. So there was some intrinsic value there.
All right. Okay. Yes. Basics. Going back to the basics.
Yep.
Intrinsic value is in the money. All right.
Let's see, what is SoFi doing now? So it's not down as much as it was earlier. So you can see that the gap is kind of filling between the put hedge and the 200 shares. Okay. Any final questions here or comments? Any final comments, Avery?
I say things are getting pretty interesting in this Trump era here in this market. So
He always makes things interesting, which is kind of good for us, really.
Yeah, gotta love that about him, I guess, you know?
Yeah, he makes the market rock and roll, and that's what's good. I like the volatility.
Right.
All right. In parting, I'd like to say if the P&L is not real, what else are they trying to conceal? I appreciate you guys, and we'll see you later next week,
See you guys next week, Monday.
Monday.